Yes. Welcome, ladies and gentlemen, and welcome to the annual general meeting of Vulcan Energy Resources Limited. My name is Gavin Rezos. I am Chair of Vulcan. I'm proud to join you today. Before I begin, I would like to acknowledge the traditional owners and custodians of the land on which this meeting is being held, the Whadjuk people of the Noongar Nation. We wish to acknowledge the strength of their continuing culture and offer our respects to elders past, present, and emerging. I'd also like to extend this respect to other Aboriginal people of the Torres Strait Islanders who may be joining us today. Consistent with our commitment to offer more opportunities for a two-way engagement with Vulcan, we are pleased to provide shareholders with the opportunity to attend and participate in a virtual meeting. Our hybrid AGM follows a temporary modification to the Corporations Act 2001. With that in mind, I'd like to welcome you, those joining via Zoom, as well as those who are attending in person in Perth. I've been informed that there is a quorum present. Therefore, the meeting is properly constituted and I declare the meeting open at 3:07 p.m. Perth time. Now, please ensure you've signed the attendance register. I'd now like to introduce you to the other directors of the company who are present at this meeting. I think, Annie, perhaps we start with you from California at midnight.
Hi, thank you, Gavin. Annie Leod, and I'm the NED of Vulcan. I am sitting in California at midnight today.
Thank you. Josephine?
Good morning, everybody. From the UK, it's Josephine Bush, Non-Executive Director, dialing in from England.
Gunther?
Yeah, good afternoon, everyone. This is Gunther Hilken calling in from Frankfurt, Germany.
And Heidi?
Good morning, this is Heidi Grön speaking. I'm calling in from Germany as well.
And Rania?
Good afternoon, Rania Al-Kadamani, and I am dialing in from Sydney. And
in Perth, we have our CEO, Managing Director, Dr. Francis Bedin, and Mark Skelton, Non-Exec Director. Can I also introduce online Chris Marino, Deputy CEO, joining us from Sweden. Chris?
Good afternoon, everyone. Thanks for being here. Deputy CEO Chris Marino from Stockholm.
Thank you. And Horst?
Good morning. My name is Horst Kreuter. I'm the Managing Director of the German company. I'm dialing from Germany.
Thank you, Horst. And in Perth, you also have Dan Tidd, Company Secretary and Legal Counsel in Perth. Now, for the benefit of all those attending the meeting, I ask that you please turn off your mobile phone or switch it to silent mode. In terms of the meeting structure and the proceedings for today, our Managing Director, Dr. Francis Bedin, will speak shortly and provide an update on Vulcan's activities. I will then deal with the formal items of business as set out in the notice of meeting. There will be an opportunity to ask questions in response to each resolution and at the end. In the meantime, I'd like to briefly highlight the work of your board over the 6 months since our last general meeting. Last year, we changed our financial year to coincide with the German financial year. This means we have delivered an annual report in March and are here now for the annual general meeting corresponding to the 6-month period 1 July 2022 to 31 December 2022. In reflection of those 6 months, a project oversight committee was established consisting of highly experienced project management and execution leaders together with operational management. There are regular reviews and status monitoring of Vulcan's projects and application as appropriate to corporate governance, risk and management frameworks. There was further implementation of the target operating model, the 360, Tom. We appointed a Deputy CEO, Chris Marino, who we introduced a few minutes ago, who started with Vulcan in September. Chris is based in Europe and is focused on advancing Vulcan's zero-carbon lithium project towards commercial production. In September, we announced the completion of a comprehensive review of the executive remuneration plan. The independent review by DDO, an external consultant, considered Vulcan's need to grow quickly and attract high-quality talent in a globally competitive environment, while supporting the company's strategy and longer-term alignment between the business unit leaders, the company and its shareholders. It is now my pleasure to introduce Dr. Francis Bedin, founder of Vulcan and the company's Managing Director and CEO. Francis.
Thanks very much, Kevin. Thumbs up. I know hopefully you'll be able to hear me in the room despite my slightly coldy voice, but thumbs up online if everyone can hear me. Perfect. Right, I'm assured that when I share my screen, it will magically appear Zoom and also on there. Perfect. The system works. And apologies for being a couple of minutes late, guys. Obviously, a few technical issues. Okay, there's a lengthy disclaimer at the beginning, which I'll take as read. It is on our website, for those who want to read it. Right, just a reminder of what we're doing here at Vulcan. So I think this is we had this slide internally as well. I think this is a really good summary of what Vulcan is trying to achieve. So purpose, we will empower a zero carbon future. And the mission is really becoming Europe's leading supplier of carbon neutral, what we call zero carbon lithium. So building our zero carbon lithium business and enabling decarbonization of the lithium industry in Europe, the birth of a new lithium chemicals industry in Europe. And as a co-product, whilst we build this project, building geothermal energy on a much larger scale than we're currently producing as well. So I think that's a nice, neat slide to remind ourselves of that. And in doing so, provide renewable heat for more than 1 million people by 2030, produce from our first 2 phases of production enough lithium hydroxide for 1 million electric vehicles per annum, thereabouts. Obviously, quite a rough estimation depending on battery chemistry, but this is the broad goal of the company. And in doing so, from those 2 sides of the business, avoiding 1 million tons of CO2 per annum. So creating a real tangible difference, a real tangible decarbonisation effect on the supply chains. Just a quick reminder of why Vulcan. So we think we're quite unique and quite special, I'm sure many companies do, but what sets us apart is that we are the world's first, and to my knowledge, only zero carbon lithium project. So developing a lithium chemicals project fully integrated with a commitment to be net zero carbon throughout, and really designed from the ground up to be a zero carbon process and project. So it's a unique product, it's a unique project, and it's really the company's USP. We are in the right place at the right time in the European market with the largest lithium resource in Europe. So really right place, right asset, right time. We have our own in-house lithium extraction IP, which again sets us apart. I think more on that later. We're substantially de-risked now. We're advanced. We're going into the execution stage, post DFS execution. We have high quality partners, high quality investors, but also high quality lithium off-takers as well. Some of the main names in the global automotive and battery markets are mostly European based, in line with what we're trying to do. We also have this renewable energy co-product. So 100% of our revenue now is from our renewable energy production from our small geothermal plant. When we do this on a larger scale, this will be a much smaller proportion of the company's revenues, but it's still an important part, and it's an important de-risking aspect of the project. We've got an exceptional team of people, so around about 300 people in-house, mostly in Germany, not to forget the team here in Perth, but a big execution, development and operations team on the ground in Germany, building this project right now, and some really unique in-house expertise. We are already a commercial producer, so we are pumping this hot lithium-rich brine up to the surface right now, producing renewable energy from this brine. So it's not a greenfield site. This is a brownfield site that we're expanding and developing to include the lithium production as well. And we are well supported as well, both from government-backed export credit agencies in Europe, but also from our existing shareholders like Stellantis and Hancock Prospecting. Just a reminder of what we're trying to build. So as mentioned earlier to one of our shareholders, this looks a lot like an oil and gas project. So integrated upstream, midstream, downstream, the upstream being the well sites, brine production from our large resource, deep underground, sort of, you can see schematically here in cross section, pumping this hot lithium-rich brine up to the surface. We have an existing one of these, the geothermal plant already, but we're building a much larger one as part of phase 1, producing heat and power from this geothermal operation, and then co-located on site, a lithium extraction plant, or LEP. Combined, we call number 3 and number 4 our GLEP, geothermal and lithium extraction plant. Taking the lithium out of the brine, producing a lithium chloride salt, and transporting that to our central lithium plant, or CLP, where we'll be producing around 24,000 tons per annum of lithium hydroxide, which gets used in the cathodes of lithium-ion batteries, which go into electric vehicles in the European market. So, as I said, there's an upstream, there's a midstream, there's a downstream, and we have the advantage that we're developing this fully integrated project, drives down our production costs, and it also drives down our carbon footprint. Just a reminder of our of where we've come to today. So it's a journey. I know that's a very sort of hackneyed and cliched phrase, but it really is a journey. Zero carbon lithium in Vulcan has gone from a whiteboard idea in 2018 to where we are now. Obviously, along the way, we've raised a lot of capital, which has enabled us to acquire some of these existing brownfields assets, build up the project through scoping study, pre-feas, definitive feasibility study, and now going to that execution phase. And now we're seeing real progress on the ground, acquisition of land for these production sites, and also building our optimization plant, which is a great asset, which I hope some of our shareholders will be able to come and see in the flesh as well, and moving towards that first commercial production. So yeah, really a lot of progress has been made to date over that journey since we started. A quick reminder of why we're in the right place. So Europe, extremely large increase in lithium demand forecast, 57-fold increase up to 2050, that is. Effectively though, over the next 10 years, lithium globally is growing at a compound annual growth rate of about 30%, which is extremely large. But in Europe in particular, we're seeing enormous growth with, at the moment, no local supply. So we're building a new industry here in Europe for lithium chemicals production. And that's to feed this complete electrification of European transportation. So 100% of new cars in the EU will be electric by 2035. New cars sold, I should say, will be electric by 2035. A lot of the countries, including Norway, will be electric well before then. So various countries have set 2025 and 2030 targets to be fully electric in terms of new cars sold. So this is happening very, very quickly on the ground. And then as you go further upstream, the battery manufacturing is also being built onshore in Europe, as is happening globally. You're seeing this kind of deglobalization, almost an onshoring of supply chains, because the main value of the electric vehicle is in the battery. And then we're seeing further upstream the onshoring of lithium chemicals production and other raw materials production as well. But current local supply mostly comes from China. 80% of lithium hydroxide or thereabouts comes from China. It is carbon intensive, which doesn't suit the likes of our off-takers who want to produce net zero carbon EVs. So Europe needs a lot of lithium. It needs it as soon as possible, right now, really, but over the next few years, this massive growth. And it wants it to be carbon neutral. So hence, right place, right time for zero carbon lithium in Europe. In addition, we need a lot of more energy supply in Europe, because we've seen an energy crisis in the last year linked to the invasion of Ukraine. Obviously, Europe has sort of weathered the storm with quite a warm winter, but it needs a lot more energy supply, particularly heating, to get off Russian gas. But it was already trying to find new sources of energy to decarbonize its energy supply. And with geothermal renewable energy, we tick both of those boxes. We can do heating. We are doing heating as part of our next stage of development, not just power. So we can decarbonize heating. And in doing so, we can provide more energy security for Germany, for France, in the center of Europe. So a nice co-product to have alongside lithium, right place, right time. And Europe is really going, Europe and Germany is really going all in on geothermal energy where it can do so for that reason. We've got policy tailwinds in our favor as well. So Critical Raw Materials Act, Net Zero Industry Act, the latest regulation announced by the EU to really bolster both of these areas. Critical raw materials, supporting things like lithium, Net Zero Industry Act, supporting things like renewable energy. The implications for us, we expect this to be passed into law at the end of the year. The implications for us could be a strategic project status. We're certainly hoping to get that, but certainly streamlined permitting and a so-called one-stop shop for permitting going forwards. There should also be funding as well from the EU, but critically, we're seeing the EU enable member states to fund their own domestic projects. And when you're in Germany or France, as we are, both of which are wealthy countries within the EU, the ability for them to be unlocked to fund their own, national strategic projects is of great benefit to us. So hopefully that will help on the funding side as well. In terms of our project, what we're developing now, we're really focused very much on what we call phase one. So the first 24,000 tons per annum of lithium hydroxide production. And you can see, hopefully you can see up there, the upstream consists of a central collection point for the brine, for heat generation, power generation, and lithium extraction. And then the downstream part, the central lithium plant at Höchst, just south of Frankfurt, to produce the lithium hydroxide. So this is what we're really focused on as a team, and we're executing on this now. So we're buying up these production well sites in addition to the existing ones at Insheim and Landau. And we'll be breaking ground and drilling to increase brine production from these sites later on this year. So this is happening on the ground right now. In addition, we're working on the downstream parts as well, in terms of the permits that we need, and then eventually in terms of the construction as well. And we're already ordering commercial long lead items for this development as well. So this is happening on the ground right now. So the upstream, the midstream, and the downstream. Just a reminder of where we sit. So we have Europe's largest lithium resource. It's globally significant. The significance of this size is that we can scale up and grow as the demand in Europe grows as well. So a phased growth process. This is phase one. So just to give you an idea, this is the core of the field, the producing core of the field. That's phase one. But the future for Vulcan is really to grow with further phases, phase two, phase three, phase four, increase our production at the chemical plant at Frankfurt, increase the upstream production as well. And every time we increase lithium production, we're increasing renewable energy production as well. So it's a benefit to local communities, local city councils as well. So hopefully everyone likes it as we continue to grow. But that growth potential is really important to strategic partners as well. So we're focused on phase one. Just zooming in quickly to what phase one looks like in terms of the execution. We have 2 in-house rigs. These are essentially onshore oil and gas rigs. We bought these in-house because we see a tightness in the market, which is really happening now in terms of rig availability. Germany wants to develop 100 new geothermal projects by 2030. There are not enough rigs in the country certified to do this. There's about 10 rigs. We have 2 of them. So we're able to drill to increase our own brine flow. We also have bought our own drilling contract labor company as well. So these guys are working now. They're just over the fence drilling for a neighbor, Copenhagen Infrastructure Partners. We'll be bringing them back over into our projects later this year when we start up our own rigs. So we have our own in-house drilling team, our own in-house drilling rigs. And the intention is really for these rigs to be drilling over the next few years, to not just on phase one, but on future phases as well. And this is a strategic asset for Vulcan and our shareholders. As Europe and Germany goes all in on geothermal energy, we have a strategic, experienced drilling team and drilling assets to be able to continue to expand this development going forwards. This is what it looks like in terms of wells and the resource. So targeting these high flow rate zones to pump up this hot lithium rich brine to the surface. There's a lot of brine down there, so we should see a very stable production and grade decline over time. Once again, this is very similar to oil and gas in terms of will likely be, what's not shown here is we'll likely be adding more wells in the field development plan in the future, taking some wells offline. Where we take them offline for lithium production, we can still keep them going for energy production as well. So at our current production sites at Insheim, we have seen 10 years of production with almost no decline in heat. So if we see a decline in lithium, we can still keep them going for heat production. And that's very, very powerful, I think, as well. We'll be increasing renewable energy production. I wanted to show this picture as well. This is a recent one, which we took of our Insheim plant. There was a workover where we had to change the pump at our well site. It just gives you an idea of the scale of these things. They're pretty small. They're about the size of a small supermarket. And you can see that it's surrounded by greenery, it's surrounded by fields and vineyards. So this is what raw materials production can look like in Europe. This is what lithium production can look like in Europe with the renewable energy co-production as well. But really what we're aiming to do here is use enzyme as a bridgehead, a beachhead rather, and really expand that power and that heat production capacity going forwards. I mentioned we have our own in-house IP. So when we started Vulcan, we wanted to use commercially proven methods of lithium extraction. Now, the main modern method of lithium extraction is a type of so-called direct lithium extraction, or DLE, called sorption. This has been commercially used since the 90s. It was invented in the 70s, but increasingly becoming the new normal for lithium extraction. Problem is, unless you have the sorbent in-house, which Livent, global top 5 producer, does, your options are generally to buy the sorbent from China or Russia. It doesn't really fit with what we're trying to do here, which is to onshore the supply chain in Europe. And it also gives away a lot of value as well, because these sorbents are not cheap to buy. So what we focused on doing is bringing the expertise to develop our own sorbent in-house. And we built up this fantastic in-house technical team to do this. Now, this is based off the same commercially available technology, but with a few tweaks to adjust it to our brine. So we've developed what we call VULZorb in-house, so Vulcan's own sorbent. And this is another asset for the company going forwards. In the future, as we, once we've executed phase 1 and we're looking at future phases, we're looking at other brine fields as well. We have our own in-house sorbent, which we can use and potentially license out. So it is an asset for us. But in the immediate term, what this means is we've taken control of our own lithium extraction. We've proven it at pilot scale. We've produced all the data that we need based off that. We continue to operate these pilots and fine-tune things, but importantly, we've proven that this works on our brine as we expected it to do, and now we can go into the execution of phase 1. This has a number of advantages, like other sorption processes. It produces products much quicker than legacy methods. It produces a purer product, and importantly, it uses heat instead of reagents to drive the process. So unlike ion exchange, in terms of the loading and the unloading of the sorbent, this is a physicochemical process driven by heat and salinity. Salinity and heat both naturally occur in this water, in this brine. And this is in contrast to the existing commercial producers using sorption who use gas to heat up their brine. So a very important difference, and one of the ways that we can decarbonize our flow sheet. So we're building this now in real time. You can see some images there. The top 2 images are our optimization plant, which we're building. This will produce the first tons of lithium hydroxide domestically fully produced in Europe. And this will be mechanically complete in the next couple of months, and then it will be firing up to start producing, obviously the commissioning phase, and then it'll start producing at full capacity. The intention of this optimization plant is to train our operations team, our production team, over the next 2 years whilst we build the commercial phase 1. So we've got a head of production now, a VP production, who's joined us from a small German company called BASF. I jest, they're obviously very large. He is building his own operations team in-house for Vulcan, who are going to be training on this plant. So what this builds is operational readiness. So by end of 2025, we should be ready to go straight into the commercial production. You can see what the full-scale commercial plant looks like. So this is phase 1 on the bottom picture there. And we are currently in the process of ordering commercial long lead items for that as well. So this is also getting built on the ground and will be built over the next couple of years, 2.5 years to be exact. In terms of the downstream processing, we use electrolysis to produce lithium hydroxide. This is essentially using commercially available chlor-alkali cells, which have been used for over 100 years in Europe, in this region actually, to produce caustic soda. Instead of processing sodium hydroxide, instead of processing sodium chloride, we're processing lithium chloride, but otherwise it's the same process. So essentially salt is being taken out of the ground and then the chlor-alkali process is run. So there's a good precedent there. And also one of our partners, NORAM, has done a lot of test work on this on the lithium side. So there's a lot of test work precedent that we're using here. But also there's existing chlor-alkali producers like Nobian, who we have a term sheet with towards a full JV agreement at the same chemical plant as us, chemical park as us, and therefore there's a lot of synergies with existing producers as well. The advantage of using this process is, apart from producing a very pure product, lithium hydroxide product, lower cost of production, but also we can use as much as possible green power to drive this process. So once again, you're reducing your use of reagents and therefore reducing your carbon footprint as well. So some really good partners, a lot of synergies, and a really good commercial analog of running these plants for over 100 years. There's been chlor-alkali, so Nobian have been operating chlor-alkali since 1912. So they know a thing or two about operating these plants. We do as well. I think together we'll be hopefully stronger. In terms of that CLP, or central lithium plant, you can see what it looks like on your screen. Once again, we'll be ordering commercial long lead items to start building this thing. But we've already built an optimization plant for this as well, which will be shipped out to site in the next few months, and we'll also start operating. Once again, also to start developing operational readiness with our teams. And you can see where our plot will be just by the river there, so some really good connectivity at that Herx Chemical Park. It's a pretty big site. We were there the other day, so looking forward to breaking ground there as well. I'm just conscious of the time. I won't dwell on this too much, but suffice to say, there is an excellent team on the ground, both here in Australia and in Germany, developing and executing on this project. A lot of mixed disciplines now, which is great to see. I'm a great believer in breaking down the barriers between different industries to develop projects like these. And we're seeing a lot of oil and gas people and chemicals industry people coming in to help us execute on this project, which is great to see. So a lot of similarities there, as I've mentioned, but some really great people on the ground who are making this happen for our shareholders. Our timeline, no major updates to this since the last update we put out. We're still targeting that end of 2025 start of production. Obviously, between now and then, there's a lot to do still. There's permitting which will be ongoing. We have to get the new production wells drilled, and we have to raise the remainder of the financing as well, which I'll touch on. This timeline is tight. I just want to be frank with everyone about that. It is a target. It is tight. Projects like these are prone to delays. We're doing what we can to avoid that, and we will continually update and re-baseline this target based on updation information. But this is what we're heading for. This is what we're striving for. On the ESG side, hopefully everyone knows this already. Material decarbonizing effect. Once we get this up and running, you can see on your screen, lithium is a very carbon-intensive industry at the moment. EVs are still better than fossil fuel vehicles, to be clear, but we can do the transition a lot better if we produce in a more sustainable manner. So the delta on there with existing production is extremely large. Once we get up and running, we will have a material decarbonizing effect. It's very important. But also what's happened recently is we have worked on our water footprint as well. So we built in a lot of recycles into our process, and we've gone from taking hundreds of tons of water per ton of lithium hydroxide produced in line with the industry standards, down to 1.6 tons net of products. This is a tiny water footprint, and this will be one of the smallest in the industry, if not the smallest. Also in terms of land footprint as well, tiny footprint on a per ton basis. So we think this is, in many respects, this is really a leader in the space environmentally. And this is starting to be reflected in sustainability ratings as well. So we're starting to get some really good sustainability ratings from third-party providers. And this has a material effect on the business. It means we can go out and recruit really good people because we have a fantastic mission of the company. And a lot of people come across taking pay cuts in some cases from really great organizations because they want to have, they want to make a difference. And, you know, they want to be able to tell their kids that they've been involved in something which was helping to decarbonize the planet. So that's having a really good effect on recruitment. It's also having a good effect on financing as well. So with a greener project, we expect to get lower borrowing costs. So there's a material effect of these leading ESG credentials on the business as well. Permitting, there's a lot of information there. Suffice to say, it is progressing on track. There is obviously still potential for delays, but so far we've had really good engagement with the authorities, and so far everything is progressing to plan. We're seeing also good feedback in the region. We've got 4 info centers set up now. We've got a big communications team, about 29 people actually, a lot of whom are boots on the ground, being out and about, speaking to local communities, local mayors, city councils, town councils, and really good feedback, particularly from the renewable heating that we're providing to local communities, or we will be providing to local communities. Just on financing, as I said, there's an upstream and there's a downstream. I won't dwell on this one, but just to show you, we call the upstream up to the lithium extraction SPV1, or Special Purpose Vehicle 1, and the downstream Special Purpose Vehicle 2, imaginatively. The overall project CAPEX from our DFS is around about 1.5 billion euro. This is including all the geothermal wells and plants, so the renewable energy business, the lithium extraction, so if you like, mine in your process plant, and your downstream lithium chemicals plant. So there's quite a lot built into that overall figure. In terms of financing this, we've got some very compelling economics. So very low OPEX, which is driven by, so very low operating cost, driven by that embodied heat within the brine, which drives that direct lithium extraction process. We've got our existing, we've got our offtake agreements with the names on the screen there, which cover the first 5 years of production. And that helps with speaking to the banks. So the banks want to see the payback period, which is 3.5 years, plus a margin fully covered by offtake. So 100% of our first 5 years of production is sold out. And this gives us a favorable lithium price built in as well, which is somewhat insulated against any future shocks of lithium price going up and down. We know that there's going to be a lot of yo-yoing in the lithium price in years to come. And this gives security for both customer and producer. So that helps. We're going to be, hopefully based on this, producing a lot of revenue once we get up and running. So combined from phase 1, SPV1, SPV2, over 700 million euro per annum is forecast. You can see the heat and power is quite a small part of that. So that's really almost becomes a byproduct once we're fully up and running, but nonetheless an important one. And this gives us a very favorable economics. So very favorable internal rate of return and extremely large NPV as well, and a short payback of 3.5 years as well. And this leads us to the financing. So we're now, having completed our DFS, we have enough cash, including the capital raise that we did recently, to progress with the execution on the ground. So we don't want to slow down. We want to continue the momentum that we've got. And our cash position will enable us to do so until we complete the financing. It will enable us to keep the project momentum up, order long lead items so we don't lose our place in the queue, acquire the land that we need, start this production drilling. So we won't slow down. We're effectively eating away at this CAPEX already, this 1.5 billion CAPEX. But we obviously need to raise substantially more. Now, the plan for this is to raise approximately 65% of the total CAPEX in debt. So BNP Paribas is assisting with that process, and they're leading the process. We've appointed legal counsel as well, borrower's legal advisor, and we'll officially be launching that process in September. But obviously, there's been a lot of market sounding activities that have happened to date, and there's a lot of work going on in the background. From the market sounding, we've got a really good response. So a couple of dozen banks, commercial and development banks, have responded positively. They want to be involved in the process. Obviously, we don't need 24 banks finally in the process, but it's really encouraging to see that really strong response. We've also seen a very strong response from export credit agencies in Europe, so including the French and the Canadian and the Italian export credit agencies, giving us signals that they'll back a substantial part of this debt financing, and that gives the banks confidence to come in on this. So the so-called sweet part of the debt financing, and this will also involve hopefully lower borrowing costs, being a green project as well. So we want to cover as much as possible with debt, but then we have the equity part as well, and this is where we're starting to execute in our strategy. We want to raise as much as possible of the equity part at a project level. So this is what our term sheet with Nobian is about. You can see here for 50% of the what we call SPV2, we have a term sheet with Nobian to invest 161 million euro to earn that 50%. Now that values SPV2 at 320 million euro. If you look at the overall phase 1 NPV, SPV2 makes up 22% of that overall NPV. So just to give you an idea, we think we can achieve a much better result for our shareholders if we bring in strategic partners like Nobian at a project level. We're up to a 50% project sell down, and you know we're stronger together, but also that will help to reduce dilution at Topco as well, which I think is what we all want to achieve together as shareholders. That leaves the upstream. So this part here, SPV1, there's an equity requirement on the upstream part as well. And we've got a lot of interest from oil and gas companies to come in on that, because once again, this resembles an oil and gas project. So we're fielding that interest at the moment. After we've completed our bridging study in September, we'll probably start to sharpen up some of those discussions. Ultimately, we want debt and equity to complete, or to be signed rather, by end of Q1 next year. And then debt should complete sort of in the months after that, in Q2 next year. And that's in line with our development timeline. And we have now enough cash to give us a runway plus a buffer to that completion of that financing. So there's a plan. So far, it's working well. And so far, it's progressing on track. And we'll obviously keep you informed of that as it progresses. So yeah, just key takeaways. It's a really special project. It's a very unique project with some unique sustainability credentials, but also we think this makes it commercially stronger and gives it some really attractive financial metrics as well. It's all about being focused on execution of phase one. So the vast majority of the company is focused on this outcome. We've got some compelling financials. We're using that to go out with our offtakes towards raising the remainder of the finance that we need. We have a strong cash position now, which means that we can get on with the job whilst we do that financing in the background. And everything so far progressing on track, notwithstanding there's a lot of moving parts. It is not easy to execute this on the ground, but so far so good. I'll leave that there, and I'll hand back over to Gavin. Do I need to unmute this? You're on mute, Gavin.
Thank you, Francis. For the benefit of shareholders, I'd just like to mention that on the feedback from banks, brokers, and institutional investors, both those who are invested in the company already, as well as those who have Vulcan on a watch list pending size parameters, particularly. The feedback's been very strongly positive of both Francis and Chris Marino on all those roadshows that have been taking place. So congratulations to our team on such great feedback from shareholders back to us as a board. Now with that, we'll go back to the formal meeting. The minutes of previous meeting, the minutes of the annual general meeting of the company held in November 2022 have been signed, and a copy can be made available for inspection from the company secretary. Now, questions from shareholders. Shareholders will be given the opportunity to ask questions of the board as they relate to the particular agenda item and resolution. When you ask a question, please advise your name and whether you are speaking as a shareholder, proxy, or corporate representative so the board can address you. For those joining via Zoom, I ask that you please submit any questions or comments via the Q&A function, which can be found at the bottom of your Zoom screen. Please start your question by typing your shareholder SRN or HIN. This will allow the moderator to identify you as a shareholder. If you'd like to ask your question verbally, type your SRN or HIN and then type I'd like to speak. Once you have finished typing, please hit enter on your keyboard to send. When you submit a question or comment, please start by typing which resolution it relates to so that it can be addressed at the appropriate time. For each resolution, we will take questions from the floor and then turn to questions online. Daniel Tidd, Vulcan's Company Secretary and Legal Counsel, will advise me of the questions. Where there is a common issue, we will also group questions thematically. Media. If there are any journalists joining us today, welcome. As I'm sure you can understand, we will prioritise questions from our shareholders. Should you wish to ask a question and are in Perth, Francis and the team will happily speak with you after the meeting. If you are joining online, please get in touch with Daniel directly and he will organise an opportunity for you to speak with Francis or myself. We now move forward to the formal business as set out in the notice of meeting. The notice of annual general meeting is to be taken as read. Voting on all resolutions will be conducted by poll. For the purposes of a poll, I appoint Flynn Mitchell of Automic, the company's share registry, who's examined and prepared summaries of the proxy forms received to act as returning officer and to conduct the poll. Shareholders in attendance via Zoom that have already submitted a vote by proxy should note that your votes will be counted towards the poll. You do not need to lodge another vote unless you wish to change your proxy instruction. Shareholders in attendance via Zoom that have not submitted a vote by proxy and wish to vote on the resolutions being put to the meeting today can do so by following the instructions provided in the notice of meeting. There are instructions on your screen for how to log on to the online voting portal. Please note that the online voting portal is now open and will remain open until the poll is declared closed. Your votes must have been submitted prior to the poll being closed for them to count. Those shareholders in attendance that are entitled to vote in the poll and are shareholders, representatives and attorneys or of shareholders and proxy holders hold yellow voting cards. If you're attending in more than one of those capacities, you'll have been issued with as many voting cards as you have separate capacities. If anyone believes that you're entitled to vote on this poll in any capacity and does not have a yellow voting card in respect thereof, please raise your hand now and a member of our share registry team will assist you. At the appropriate time, I will ask that you mark your vote for the resolution on the yellow voting card. If you are a shareholder and wish to cast all your votes for a resolution, please place a mark in either the for, against, or abstain box next to that resolution. If you wish to split your votes, please write against the number of the portion of votes you wish to cast in the corresponding for, against, or abstain boxes. Please note that the sum of the split votes must not exceed your total holding. If you are a proxy holder, a summary of the votes to which you are entitled has been attached to the voting card. If the summary of votes includes discretionary votes, these are yours to cast at your discretion. If you wish to cast the discretionary votes, please place a mark in the corresponding for, against, or abstain boxes. If your summary of votes does not have any discretionary votes, you do not need to mark your voting card and will simply need to hand it in to the returning officer at the end of the resolutions. After all resolutions have been read and voted upon, please place it in one of the ballot boxes that will be circulating in the room. Proxies have been inspected and all those validly lodged have been accepted. Proxies have been received representing up to 55,127,578 shares, or approximately 33% of the issued capital of the company. All undirected proxies or open votes that have nominated the chairman of the meeting as their proxy will be cast in favour of each resolution in the notice of annual general meeting as set out in the notice. We will now proceed to the resolutions set out in the annual general meeting. Now, to streamline the meeting, details of the resolutions, the proxy votes and voting restrictions for each resolution will be on the screen. I do not intend to read them out as they will be there for you to view. There are 5 resolutions to be considered by the meeting. The first item of business is to receive and consider the financial statements and reports for the year ended 31 December 2022. This is a discussion item only and does not require a resolution. I formally table the financial instruments or statements of the company and its controlled entities for the year ended 31 December 2022 and the related directors' report, directors' declarations and auditors' report as set out in the company's annual report for the period 1 July to 31 December 2022. A representative from the company's external auditor, RSM, is available to answer any questions to the auditors. Are there any questions from shareholders regarding this item of business? There being no questions, I will move to the resolutions. We'll now move on to resolution 1, adoption of the remuneration report. When determining the details of the resolution and proxy votes are on the screen, when determining the remuneration outcomes, the board has carefully considered the achievements made over the year, which Francis has outlined, in combination with the external factors that may have had an impact on the company. The board believes the outcomes, as outlined in the remuneration report, are reasonable and provide appropriate alignment between executive performance, shareholder returns, and recognition of executive retention, criticality over the next business phase. The resolution is open to discussion. Just noticing the resolutions are not up on the screen as yet, so I'll actually ask Dan in the room or Francis to read out the actual resolution on this, the adoption of the REM report.
Yeah, I'll read the first resolution, adoption of the remuneration report. or 30,329,911 votes for, and 310,000 votes against, with 367,419 votes discretionary.
Thank you, Dan. Does anybody else wish to ask a question from the floor or online? There being no further questions, I now put the resolution to the meeting. Please use your ballot paper to vote on the resolution. Those attending virtually can vote via the online portal. However, we are reminded not to click on next until you have selected your vote for all resolutions. Perhaps, Dan, you could let me know when all persons having intended to vote in the room have now voted.
Yes, that's fine, Gavin.
Thank you. So the next item of business is resolution 2. So I'll pass on to Francis as it concerns myself.
Resolution 2 is re-election of Director Gavin Rizos. Mr. Rizos is the non-executive chair of the company and has many years of Australian and international corporate project finance and investment banking experience, and is both the former head of legal and compliance across multiple countries for the HSBC Group and an investment banking director of HSBC Group with regional roles during his career based in London, Sydney and Dubai. Mr. Rizos has held chairman, board and CEO positions of companies in the materials, technology and resources sector in Australia, the United Kingdom, the US and Singapore, and was formerly a non-executive director of Iluka Resources and of Rowing Australia, peak Olympic sports body for rowing in Australia. He is a principal of Viaticus Capital. Gavin has made an invaluable contribution to Vulcan since his appointment in September 2019, and we welcome his continued support of Vulcan. Details for this resolution and the proxy votes will be read out by.
Okay, votes for 52,400,752. Votes against 2,324,096, and discretionary 382,562.
Thanks, Dan. The resolution is open to discussion. Does anybody wish to ask a question? Any questions from the floor or any questions? There being no questions, I now put the resolution. Vote by the online portal. However, I'm reminded not to click on next until you have selected your vote for all resolutions. Have all persons who intend to vote now voted? Okay, well, thank you very much. And thanks to Yemen.
Thank you, Francis. The next item of business, resolution 3, is re-election of Director Dr. Heidi Groen. Dr. Groen is non-exec director of the company and a chemical engineer with more than 20 years experience in the chemicals industry. Since 2007, Dr. Groen has been a senior executive with Evonik, a specialty chemicals company. At Evonik, Dr. Groen is currently responsible for production and technology and for global product safety, including impact assessment and development of solutions for the EU chemical strategy for sustainability, as well as the management of Evonik's major investment volumes and production network. Heidi has made an invaluable contribution to Vulcan since her appointment in March 2021, and we welcome her continued support of Vulcan. Now, in terms of the resolution for the re-election of Dr. Groen, the votes for are 54,503,281, 98.8%, against 246,770, 0.45%, discretionary 377,257, being 0.68%. The resolution is now open to discussion. Does anybody have a question?
The questions.
Thank you. Any questions online? No. There being no further questions, I now put the resolution to the meeting. Please use your ballot paper to vote on the resolution. Those attending virtually can vote via the online portal. However, are reminded not to click on next until you've selected your vote for all resolutions. Have all persons who intend to vote now voted?
Yes.
Thanks, Dan. The next item of business is resolution 4, issue performance rights to Rania Al-Qadamani. The details of the proxy votes for this resolution, votes for are 48,888,507, representing 96.93% votes for. Against 1,161,133, representing 2.3%. Against. Discretionary, 386,360, representing 0.77%. Resolutions open to discussion. Do we have any questions?
No.
No, thank you. I might just add at this point, for the benefit of shareholders, that we are a bit of a pioneer in this space in providing or asking shareholders to approve service equity, which has no performance hurdles whatsoever, to directors on the basis of service only. This enables us to preserve cash, and we've had the major proxy advisors accept this proposition, and so thanks to the team for getting that message across. And I think it's very positive for the industry to be able to attract the right people at these levels for a company trying to preserving cash, to reward them so they have alignment with shareholders, but there's no conflict because there are no performance rights, only time served. So thank you for your support, shareholders, on that. There being no further questions, I now put the resolution to the meeting. Please use your ballot paper to vote on the resolution. Those attending virtually can vote via the online portal. However, are reminded not to click on next until you've selected your vote for all resolutions. All persons voted?
Yes.
Thank you. The next item of business, resolution 5, is the ratification of shares under placement. As you would know, the company recently raised $109 million Australian before cost on the issue of 21.4 million shares, which is strongly supported by existing and new shareholders, including a number of ESG-focused institutions. I would like to take a moment, though, to acknowledge that for some, this was at short notice, and the nature of the private placement was not comfortable for all, in that we didn't invite all shareholders to participate. This is something we've taken note of, and in the future equity raisings or capital raisings, we will address the rights of all shareholders in that particular raising. Now, details for the voting for the ratification of issue of shares under placement. For 30,161,179, representing 80.34% in favour. Against 7,362,507, representing 19.61%. Against discretionary 19,839, representing 0.05%. The resolution is open to discussion. Does anybody wish to ask a question?
No questions.
Thank you, Dan. And none online. There being no further questions, I now put the resolution to the meeting. Please use your ballot paper to vote on the resolution. Those attending virtually can vote on the online portal. However, are reminded not to click next until you've selected your vote for all resolutions. This being the final one, I think you can click next, finally. Have everyone voted now?
Yes, Gavin.
Thank you. So it appears the voting process has been completed. I request that Automic representative collect all the ballot papers. Please ensure that your ballot paper is collected so your votes can be counted. I therefore declare the poll closed. Results of the poll will be lodged with the ASX after the meeting. Ladies and gentlemen, we have now completed the matters contained in the notice of meeting, and I declare the meeting closed. I thank you all for your attendance and your continued support for this very important initiative, the Zero Carbon Lithium project, not just for us as shareholders, but for Europe. And I think it's an important project for what can be done in terms of climate and future production of lithium. Thank you.